Good morning, good evening, good afternoon, everybody. Can everyone hear my voice just fine? Okay, I'm just turning on my screen sharing now. Give me a second here. And voila. There we go. Fantastic. Okay, just turning on screen sharing right now. And you should be able to see my screen as well. Okay, so for those of you guys who do not know me, my name is Navin Prithyani. I am the mentor at urbanforex.com, senior trader at forexwatchers.com, and I am here as your webinar host today at fxstreet.com. I'm here once a month. This is a premium webinar, so we do get into things a little bit more deeper here. So I thank you guys for attending, and I thank you FX Street for having me here yet once again. So since we don't have much time with us here today, we're going to go straight into it. Basically, what we're going to be doing is live analysis to see what is up in the markets for this week, if not the upcoming week. So we're going to be looking at time frames, 4-hour time frames and above, right? So let's have a look first at the calendar just to find out what is going on. So obviously, a good place to start with is the FX Street economic calendar. I always start my days by looking over there and seeing, well, what's in store for today. Okay, so you can obviously put in filters in if you don't want to see the yellow news. You want to just see medium or aggressive news, and then you hit filter results, and there you go. So basically all these are done, and we are looking at the next news in 2 hours and 21 minutes, which is going to be for US dollars. Okay, so now, I am not concerned about what news is coming, what the numbers are going to be. What I'm interested in knowing is there going to be market activity today? Okay, because any setup that you do when it comes to trading, whether it's you're a range trader or a trend pullback trader, or you trade, I don't know, a moving average crossover, for any system or technique to work, you need order flow. You need markets to buy and sell, okay? And chances are, for a trade to work, you're looking for trades to leave the current location and go a certain distance away from the current market price, right? So for that, you need some kind of reasoning in the market, or what we call a catalyst, to push the market into a certain direction, okay? Now, whether you are right in reading it or wrong in reading it, that is on your skill set of how well you read the markets and interpret the information laid out in front of you. So let's take a look at some of these charts. Okay, as always, I want to remind you guys that when you look at a chart, the thing that you are seeing is nothing but a receipt. This is already past tense. What you're looking at is past tense, because the current candle does not matter until it's closed. Okay, it actually does not matter. It only causes confusion and higher levels of emotion. So if I look at one candle prior and anything before that, that is nothing but past history. So past history of this particular chart means, what has the Aussie yen been doing this whole time period? Okay, and when you study these charts, you're actually looking for behavioral patterns of this currency. Okay, now if you pick up additional currencies, like for example, instead of Aussie yen, you go on to Aussie Swiss franc or Aussie CAD or Aussie New Zealand, you now start to pick up behavioral patterns of something called just Aussie. Okay, now we're stepping into what we call correlation. Okay, correlation is looking at the behavioral pattern of all of one currency itself. And if you start to find very similar designs, for example, if all the Aussies are trying to go in one direction, that tells you Aussie is starting to become a control pair, which means if Aussie New Zealand or Aussie yen or Aussie USD has a support and resistance that you're drawing, chances are that support and resistance is going to be respected across all the different Aussies. Okay, so if prices reach up to this area on Aussie New Zealand on this chart, and I look at Aussie yen and I'm like, this one's going down too, but his support resistance all the way up here. If I see the support resistance start to line up, that tells you it is pretty much lining up to get ready to get going again, based on whatever your strategy might be. Okay? So a few things to keep in mind. These are very, very basic things that many people overlook because they're simply looking for a strategy. Just tell me what to do to make money, right? Although as beautiful as that sounds, it needs to be a little bit more difficult than that. Okay? It has to be. Otherwise, trading is going to be a business for every amateur, right? So it's made difficult on purpose, and it is nothing but trying to read the market. So what we're doing in these charts, we're looking for areas where markets cannot make a decision after substantial movements. For example, here, they make certain movements, here makes a movement again, and then it cannot make a decision for a sort of sustained period of time before moving again. Okay? So our job is to read this stuff to the best of our abilities. Okay? So every time you have a sustained move, you read the junk in between to find out what am I going to do with my next sustained move. Okay? Now, you can also trade the junk, which we call ranges, right? You can also trade that, which means buy from the bottom, sell from the top, which is your normal range strategies as they're taught. But you also need to know what happens at times like these when ranges get disrespected and the prices come back. Okay? There's certain times when ranges will get disrespected, but then at certain times ranges will get respected. Well, which one do you believe? Okay? We all know the vocabulary for these things. Oh, that's a faker. That's a probe. That's a fake out. Okay, well, when this thing happens, are we going to say that's a faker, that's a probe, that's a fake out? Or are we going to see this thing move away and then we're like, oh, no, it's not a faker, and then hit the sells down here? Okay, so that's an important thing to do, and that requires skill. That requires skill, which means lots and lots of hard time, studying, finding out what makes the market move, what are they looking for, and stuff like that. If you do not answer those questions, then everything is just a definition. So far, so good? Everything making sense? Yeah, I always like to start with a little core basic of, hey man, let's not forget what we're doing here. Okay? Because everyone's so busy looking for strategy these days that they forget the very core basics of what they're actually doing when they turn on the monitor and say, okay, what do I do today? Okay? So keep that stuff in mind. Don't rush into things, okay? All right, so let's scan around. Let's see what we got. Okay, I'm on the 4-hour chart. I'm going to start top down. I'm going to take a look at the Aussies first. And before I do that, let me go into the elite community, which is my forum for all my traders. Let's go into the currency strength. Let me look at that correlation. Remember I was telling you about correlation with the Aussie? We're going to look at that first and just find out what the momentum is of the market to find out what's going on. This is the daily charts, which is one time frame above. Okay, so we're looking at USD as +7. Okay, it's out of 7, everything. So that 7 out of 7 means US dollar is extremely strong. Swiss franc, nothing going on. Euro -5, which means it's weak. Pound is extremely weak. Yen is strong. So we're looking at these 4 pairs as our focal points. Okay, we got USD, Euro, Yen, and Pound. Okay, so let's take a look at these groups one at a time. So let's start with the USD group. USD, here we go. So we got Euro USD. I'm going to start with that one. Where'd it go? Here we go. Euro USD. All right. So let's take a look at Euro USD and see that you can see why dollar is staying strong, because it's starting to make its move in a downward trend, right? But it's not just on Euro USD, but it's also on Pound USD. These trends is what's making those numbers shine as, oh my God, it's not just Euro USD or Pound USD or USD CAD or USD Swiss franc. It's the dollar itself. Okay, when you understand this hint, you know when you start getting prices that look unusual, you can actually trade against it. So let me explain that. Okay, if you knew price was going in this direction in a downtrend, and you had studied everything, and everything said US dollar is extremely strong, which means the chart would go downwards, when prices start to come up like this. This looks like a higher high from this support resistance. This looks like a higher low. It looks like it's holding above support resistance, right? And then this looks like another yet higher high, right? All these things are going to make traders go long, go long, go long. Look at all these higher lows, higher lows, higher lows. Go long, go long, go long. But with that added piece of information, you know that you are not going long, but rather than going long, as more and more people go long, you are able to take the prices at high prices from them and you go short. Because if you have to sell, you have to sell to somebody who's willing to buy. Okay? Down here, when it's already on its move and you try to sell it and everybody's selling it, then who's buying it from you? Okay? Okay. If you're selling, I'm selling, Bob is selling, Sheila is selling, Jonah is selling, everybody's selling. Well, who's buying it? Who's buying it? So that's why the momentum starts to go down like crazy, because people who are all selling it, the buyers just can't compete to offset the prices. So people are saying, you know what? I'll sell to you at this price. Okay, I'll sell to you at this price. I will sell it to you at this price. Imagine a store going out of business. I will sell it to you at this price. Okay, I will sell you my furniture at this price, or my electronics at this price. And they keep lowering it because there's so much competition in the selling industry, and there's not many buyers. Okay, that's exactly how a chart works. So your job is to get in when it's not visible to the market of which is the direction to go. Because once this thing starts, it's going to pull in everybody into the sell mode, and the panic is going to start creating in. And that's what's going to create really bad prices to get in. When you get really bad prices like that, you get stopped out a lot quicker. Okay, I hope this is making sense. It's the very fundamentals of trading, which is so not looked upon in a clean way. So let's take a look at this also with time frame. Okay, so this is the 4-hour chart. Let me go up to one more time frame. Let's go on to the daily. I'm going to mark this area. Let's go on to the daily. And just give it a second. Just let it load. It's weird. Okay, here we go. Here's daily. Now look at that. Look at that. This downward movement is coming from this original uptrend in the market, right? People just looking at this as, oh my God, look at that, higher high, higher low, higher high, higher low. And just like the stock market, everyone thinks if something is going up, it's gonna go up forever, right? Real estate is doing good, it's gonna do good forever. Cryptocurrencies are doing good, it's gonna do good forever. Okay, that's why people end up jumping at higher prices, saying, I'll take it, I'll take it, I'll take it, I'll take it. And they buy at very, very expensive prices without waiting for discounts, discounts to come into the market. Okay, so you want to keep these things in mind, that you wanna get discounts to come in. Now the question obviously is, well, when do I know the discount is gonna end? Okay, and that's where your strategy needs to be ironclad. Now, whatever your strategy you're following to know when that discount ends, needs to be consistent. You can't do it one way, one day, another way, the next day, and then mix it all up on the third day. You gotta keep it consistent. If you do not keep it consistent, it's gonna cause problems. Okay, then you won't be able to measure if your strategy is working and if it's good enough. Okay, so the best things we always mention is go with price action. Okay, learn to read price action more than indicators, because price will obviously move first, indicator will eventually follow, and then following the indicator is the person. So he's number 3 in line. Okay, So price is number one, indicator is number two, and the guy trading is number three. He's always last to the game because he's following the indicator. So you want to cut out the indicator and you want to become that number two. You're still following the price, but you're trying to stay ahead of it now, which means trying to anticipate the buy inside the sell. If you understand that concept, you will know that your buys are successfully happening when the candles are red, and your sells are successfully happening when the candles are green. So that illusion of you should only sell when the trend is down and you should only sell when the candles are red is incorrect. Is incorrect. So you need to understand this concept. Okay? All right. So, all right, let's get into the dollar thing. So let me go back to so here we go. So this is the daily chart now. We've got Euro USD. Now in Euro USD, what we're looking at is a downtrend just coming in. It's just dropping and dropping and dropping, right? Now we do see it's officially making a brand new trend. Why? What we need right now is a discounted price so we can get in, because we're not going to sell down here. It's way too dangerous. Way too dangerous. The comment is from Al Galen. Hi, hello. Isn't it a adaptation skill to say, okay, the market's changing gear direction, I need to adapt quickly? No. So, okay, that's something that needs to be adjusted. The word quickly does not exist in the market unless you are trading, day trading, like the 1 minute, the 5 minute charts or the 3 minute charts. Otherwise, nothing happens quickly. In fact, trading is the most patient game out there. If you are patient, you'll make more money than the people who are adapting quickly and ruining their accounts. Because don't forget, the more you trade, the more fees and spreads you pay, which eventually puts the money back into the market. So you have to be very careful with that and understanding that logic. Okay? To trade quicker and faster and more, you need to be right above 80%, in my personal opinion. You have to be very good at what you do. Okay? So when the market shifts, so we're going to discuss this right now. This will help you. So when the markets are going down like this, right? We're looking at this area as, oh, that's an area of support and resistance that was broken. That's fine. Now, what we're looking at is this general area, because if I draw a line here, or if I draw a line here, or if I draw a line here, it does not matter. All of those lines are going to be respected at one point or another. So there is no such thing as the perfect SNR line or the perfect support and resistance. It is an illusion. Wherever you draw your SNR line on the chart, it will get respected. You just put any random line somewhere, it will get respected. And you can test it and see what I'm saying about this. Okay? But a support and resistance line generally is a good way to measure a halt area and then prices going outside the halt. Okay? And I can say roughly, that's my support and resistance chunk, block. Okay? I call them zones. I have some YouTube webinars on this regarding support and resistance, so you can get a better idea as well if you need to. All right, so now that prices are going down, we know that the dollar is strong because it's strong across the board. What we need is prices to come up and give us a discount. Now, how do you know prices are going to come up? Two things are going to happen. One, you're going to get the markets to go up a little bit aggressively. Why aggressively? Because the whole world right now is selling, okay, at least immediately. Anyone looking at the charts in this month is like, oh my God, sell, 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 sell. Until you don't get a significant price rebound, people are not going to change their mind. Let them first start to change their mind as it starts to go up. Okay? As the markets start to go up, people will start beginning buyers. Here's why. Stage one. Okay, there's multiple stages to this. Stage one, when the prices are going down and everyone's a seller, no one thinks it's a buy. Stage two, when prices go up again, all the sellers who are looking at this, they're like in panic mode, like, what is going on? I thought it's a sell. As each rebound happens, they get a sense of relief, like, oh, thank God it's coming down again. It's coming down again. But each subsequent higher highs that it makes, okay, so stage one is it's fine, okay, it's normal. They feel okay, it's just normal. Stage two, panic, and stage three is action. They say, my cells are not working, close the cells, turn buyer. Okay, or they're stopped out by now. Turn buyer. It's not a sell, it's a buy. Can't you see it? It's going up. My dog can see it, my cat can see it, my neighbor can see it. It's a buy now. Here's the problem. Now the public starts buying aggressively because now they can see the buy. Okay, take a look at this. Market begins to go up. But in this downtrend, no one cares about this up. They're like, it's okay. Stage two happens. Okay? They're like, huh? Okay, it's okay. It's going to come down. Notice the aggression after that. Notice the aggression after that. It gets even more aggressive. Now they go into panic mode. Their stop losses are hit and they frantically buy. Not buy at this price. They start buying at these prices. They start chasing the market at higher and higher and higher prices. And then they hold. And then they hold. While getting chopped up into all of this, and the market starts to turn. Now those people who are buying and holding, notice they're buying from up here at these prices. So as prices start to drop below that price, it's okay, hold on. As they go a little bit lower, panic. Oh my God, what's going on? As they go even lower, exit your positions, turn seller. So notice all the sellers are not joining from up here, they're joining from down here. That increases, like imagine like a pyramid, okay? On the top of the selling, there's a very few people, if you want to call it the top 1% of the people who know what they're doing, they're selling from up there. Then you have a little bit more people coming in. We got the professionals, we got the hedge funds, we got all those people coming in. And then down here, we got the public money coming in. You know, you got a lot of people down here. Bunch of people coming in from down here. So just think of it like that. The more deeper it goes, the more people jump on. Okay? So that's why I always say it's look at the housing market, look at the .com, look at Bitcoins, same concept. Every time something goes good, people's fear or greed kicks in at the wrong time. Okay? Does that make sense? Is that catching on quickly? If you can just understand this basic, you will start to notice your trading having a shift. Okay? Your strategy needs to adjust to this information. Whatever strategy it may be, it needs to adjust to this. Do not sell when it's too late. Do not sell when it's too low. But buying it in an area that's masked as a downtrend, or selling it when the area is masked as an uptrend, is the moment where your trades are going to be a little bit more successful. Okay, so there's the next comment. Is it hard to sell high when the market goes up? No, it's not hard to sell when the market goes up. So here's the thing: if the markets are going up, okay, and as the prices keep rising and rising and rising, of course no one is expecting you to hit that sell right there. Or hit that sell right there, because what happens is people do this. They'll use their scroll and they'll say, okay, if I sold right there and I exited right there, that is 71 or 715 pips. That means this much dollars. That means this much things I can do in life. That means etc., etc., etc. The dream is very high for catching the highest price. I'm here telling you, you don't want to catch the highest price. You let the highest prices be a game of the professionals. Let the professionals take the highest price first. Let them pave the way. So what I'm talking about is these guys. When you're looking at this downtrend coming in, right? Lower lows, lower highs, lower lows, lower highs, lower lows. And then they come in hard. They pave the way. And when it pulls back, you start getting in here. Okay, not up here, but down here. When it's still masked in the downtrend, you're not supposed to get this price. This price is for people who have access to information that we do not. So you need to see them come in with a lot of money because they're the only ones who can put enough money to turn the market around. Does that make sense? So once you start seeing their activity, you start looking at their receipts, like I've been saying in the beginning of the webinar, and you start feeling those receipts and you're like, huh, I notice his pattern is starting to change a bit. I'm going to hit the buys. I'm going to go with him. Instead of saying, he's been selling for the last 10 years, I want to keep selling. Okay? So when you do that and you combine that with the information of, wait a minute, the entire US dollar is getting strong. If it temporarily goes up and people think it's a buy, good. I'm going to hit that sell. Okay? Not the first sell, not the highest point. I want the markets to come in aggressively and then I'll take the first turnaround. Okay, so never this price. Okay, I hope that makes sense. Okay, taking these prices are a game of support and resistance, Fibonacci, supply and demand, all these types of people out there, which means they're playing the lottery. Can I get the best price? Because when I can get the best price, I can show off to people. But it doesn't mean anything. Can you do it consistently, day in and day out, day in and day out? Okay, so let me see if I can show you a high, a buy that was done this week. Let me see. Let's go down here. Let's see. We've got some, okay, USD Swiss franc buy, USD yen sell. Okay, let's take a look at these sells, right? Some of these sells here. Okay, so notice how I'm doing this sell right here, stop losses. I'm not picking high prices. I'm not picking high prices. Although, look at the aggression of these buyers coming in so aggressively. Look at the aggression of this buyer at the end coming in so aggressively. And I'm hitting the sells. Now, that makes people be like, are you crazy? That's a higher high, higher low sequence. That's an uptrend. Why would you hit the sell? Doesn't make any sense. Okay? And anyone who's saying, yeah, but I can see the overall trend is down. Yeah, but if you go down to the 5 minutes, the overall trend is up. So which trend are you looking at? 5 minutes, 15, 1 hour, 4 hours? You know, you can choose any time frame and you have a new trend. So you need to understand market concepts of, well, what are you looking at? That's where you make your decision. Okay? So as this trade progresses, this trade goes out aggressively. And as you can see, I'm extracting money along the way, obviously, because you always have to be careful of what's going on in the market. Now, as soon as prices start to break support and resistance, tries to make sort of like a lower low sequence, that's when I think now the public is going to start jumping on. And that's when I actually start to exit. Okay, position exit on this one. I took out approximately 1,800 from this, but I exit when I think now the public wants to sell it. I'm not interested in selling it anymore if everyone can see the sell now. Okay, does that make sense? Okay, let me see if I can have a buy example. Okay, let's take a look at this buy here. All right, let me see if I was able to grab, yeah, here we go. Look at that downward movement, aggressive, 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 and I'm buying it. And I'm buying it. Okay, there's a lot more to it. Obviously, it looks a lot more simplified, but I'm trying to prove to you a point here that you have to buy in the sell. You have to sell in the buy. You cannot buy with the buy because you're doing what everybody else would be doing then, and you're going to be in trouble. You're going to be in trouble. So this particular buy, I get in, I'm monitoring it, I'm labeling all the areas when the prices start to get up there, people are going to switch and become buyers, but I'm looking to get out. I'm looking to get out. Okay, so I'm moving my stops along the way. Here, stops move to break even, and I'm a little bit fearful now because we're now making higher highs, higher lows, and I'm like, uh-oh, the public is going to start watching this. but that's okay. There are some supply here, supply and demand sellers here, supply and demand sellers. I'm like, good. Let them keep thinking it's a sell until I can crush them a little bit more, and then I can come back and saying, okay, I need to get out. So I extracted more money in this area, okay, in these uptrends. Okay, I was on my cell phone on this day. So same thing here, took out around 1,500 and had another 1,800 running. And then finally I exited my entire position. I got out because now I know the buys are too strong. The public likes to see the buy. I need to get out. I need to get out. Okay. So these are all, these are my students in the elite community, and we do trade alongs and stuff like that. So the main piece in all of this stuff is people have the right idea of trading. People have the right education of trading. Almost the right education of trading. Sorry, I take that back. Okay, their techniques, their strategies, they're all correct, but there's one key ingredient missing to their own technique. I'm not saying you have to do my technique, your own technique, whatever it may be. Moving average, crossovers, or MACD, or divergence, or supply and demand, or support resistance, or Fibonacci, whatever it may be. Always use this concept of, is it in the public's eye or not? If you understand that, then you know when your strategy is going to work and when it will not work. The key is knowing when it will not work. That is going to be your money maker and money saver. Okay, if you can answer the question of when your technique is not going to work based on what price is doing, that's when things will start to shift for you in your mind, in your trading, in the way understanding how money works. Okay, all right. So this thing became very educational today. We didn't go into much analysis, but I hope this was useful for you guys. I think I saw some questions coming up, so I felt there was more to explain the situations of the market. So I hope it was useful. I hope you guys can put it to use. It is nothing that you have to learn years and years and then do it. You can go apply it today. Look at your charts over again. Look at your trades that you might have lost or you might have won, and really put this logic inside that and be like, oh my God, can I see a pattern here that's happening over and over and over again? And when you put these two and two together, you'll start to understand, okay, so there is a common pattern in the market, and the common pattern is people are selling when they're not supposed to be selling anymore. And that's when the buying happens. People are buying when they're not supposed to be buying anymore, and that's when the selling happens. Okay? You master that concept, then you work on your trading, on how to enter the trade, then you work on your stop losses, on how to get the best amount of risk control, then you work on your take profits after that to find out where do you need to exit your trade, and then you manage all that together with money management and trade management of, okay, once I'm in the trade, what am I going to do next? What if it doesn't go in my favor? What am I going to do? What if it goes in my favor? What am I going to do? All these things need to be ready before hitting the trigger. Okay, so once you have these things in play, it just makes you a better trader day after day after day. So keep at it. There is a lot of good traders out there. There's a lot of good, hardworking, developing traders out there as well. Lots of FX Street users I've seen. They've shown tremendous growth. I've seen them in my webinars come in, come out, and they're doing very well. So I'm happy to assist as much as I can. Like I said, these are premium webinars, so I do share a little bit more information more openly. So I look forward to seeing you guys again next month. So thank you again for everyone for coming up. That's all the time we have today. Thank you, FX Street, for having me. I will see you guys all next month. Cheers, guys. Bye for now.